I'll try and make a brief opening statement about what the case for Bitcoin is and why I think it's interesting and why I think it's likely to win. And that's going to be a brief summary of the main of some of the main ideas in my book, The Bitcoin Standard. The book starts with looking at the history of money, and I make the argument that historically what ends up being chosen as money, what ends up being used as money on the market, is whatever is the hardest to produce. And we have many examples that we can see that can support this contention. So in prison, people will use cigarettes because nobody can manufacture cigarettes in prison, and so they're rare and they're not easy to make. And so they get used as money. Historically, in places where seashells, people have used rare seashells as money. So for instance, in West Africa, where they did not have the technology to make glass beads that were imported from abroad were very rare and they were very hard to make, and so they were used as money. And of course, most importantly, gold became money historically and was money at basically all over the planet at the end of the 19th century, because gold, the chemistry of gold makes it so that it has the money supply that can, it has the supply that increases at the lowest rate of all metals. So by the end of the 19th century, you know, we had been mining gold for thousands of years all throughout history. And since gold does not ruin and does not corrode and does not go bad and there's no way of destroying it, we're constantly accumulating a larger stockpile of gold. So the liquid supply of gold on the market that is being bought and sold by people is always very large compared to any year's annual production. In other words, on any particular year, even though every year we make more gold and we get better at looking for it and gold production annually increases, it still always remains a small fraction of the existing stockpile of golds, meaning that the supply of gold is always growing at around 1.5% to 2% per year. And that's, in my opinion, that's what makes gold money. That's what made gold money. Gold wasn't money because it's yellow or shiny or nice. It's money because it's the one thing that is the least inflatable, if you want. It's the one thing whose supply can't be increased the most. In second place comes silver, but silver can corrode, and silver is more common in the Earth's crust than gold, and so it had historically a supply growth rate somewhere around 5 to 10% or so. But for all other metals, the annual supply growth rate is much larger. It's closer to 50 or 100 or maybe 200%, because every year the stockpile is being consumed. So whether it's oil or copper or zinc, these things get used in industrial applications where they get consumed, and so they're no longer part of the liquid supply that is available on the market, and so their new production is always very large compared to the existing liquid supply on the market, and that makes them useless as money. Because if everybody wanted to choose copper as money, a lot of kind of Marxist economists will tell you that money is a common hallucination, that if we all decide to hallucinate hard enough that something is money, then we will use that thing as money. And I think that's completely ridiculous, like everything that Marxists say. Because if we all decided to hallucinate that copper is money, then copper miners will just make a lot of copper and they will flood the market with it, and all of the money that we stored in copper will just end up being a donation for copper miners. They will meet the demand of the market for industrial copper and meet the demand for monetary copper with a lot of ease, because the stockpile of existing copper is always very small compared to the quantity that they can produce, or not small, but in the same kind of range of magnitude as the stock. So we can, if we take the inverse of the annual growth rate, we call it the stock to flow ratio, and that's a key concept in my book. The ratio of the existing stockpiles to the annual production. And so for gold, this has historically been something around 50 to 60, 70 maybe sometimes. For silver, it's around 20 historically. Now it's much lower. It's closer to 3, which is why silver is losing its monetary role. And for all other metals, for all other market commodities, that ratio is closer to 1. So every year, we're producing roughly what we consume every year. Maybe 50% more, 100% less, or 50% less, 50% more. But generally, With all these non-monetary commodities, they can't have a monetary role because the stockpile is very similar to the annual production. So that, in my opinion, is what makes money. That's what ends up being money on the market. Um, for one reason, which is, the less obvious reason is that people can, or the less powerful reason is that people can think about this and can understand it. But I argue that that is even irrelevant. People don't even need to understand that this is economic reality that forces itself. In other words, if we lived in a world in which people randomly chose their money from all the objects that they find and didn't ever think about this issue of what holds value better, we will still end up in a world in which gold becomes money simply because everybody who puts their money in other things will witness the value of their wealth disappear. So if you put your money in copper, in oil, in fish, in water, in zinc, nickel, whatever it is, the producers of this thing will make more of it because you're increasing the demand for it, and so you're increasing the price, and so you're increasing the incentive for the producers to make more of it, and therefore the producers will make more, they will flood the market with it, and the value that you put in it will disappear. And so this is going to destroy the value, the monetary value that you've stored in it, and the only monetary value that will remain will be the one that is stored in the metals that have a high stock to flow ratio. So even if we go around choosing monies randomly for 100 years, at the end of those 100 years, the majority of wealth will be stored in the money that is the hardest to produce because that's the one that will maintain its value. So historically, this I think is the case for why we can understand that gold became money. And then, of course, we had the 20th century where humanity took a massive hit to its civilizational project when we decided to give up on, well, we didn't decide, but governments decided that hard money that allows people to store wealth and maintain value into the future is not conducive to their spending plans, and so they forced people effectively to use horrible inflationary national currencies. And if we look at the track record of these national currencies, fiat monies, we see that the best fiat currencies increase at around 5, 6, 7% per year in terms of their supply. And of course, the worst ones will increase at much higher than that. Some of them will increase in their supply by 100 or 200 or even 300% per year. So that I think has been massively destructive for humanity because it has destroyed our ability to save. It's destroyed our ability to provide for the future. And my favorite focus, my hobby horse, is the topic of time preference. By reducing our ability to provide for the future, this basically reverses the process of lowering our time preference and forces us to become more present oriented and less future oriented in our approach to these kind of questions, to all questions across life. And I think you see this reflected in all aspects of things throughout the 20th century. So where Bitcoin comes in is that gold is stoppable by governments. In order to use gold as money, more and more interconnected, trade in gold became reliant on central banks and on governments allowing gold to trade. Effectively, the topic, the concept of the saleability or the liquidity across time, across space of gold is reliant on governments, and then governments managed to stop gold from trading by confiscating it and by banning people from setting up free market gold-based banks and forcing people to use their inflationary currencies. Where Bitcoin, I think, is really important is that it sidesteps this. It allows us to have gold's hardness and saleability across time and the ability to save and store value into the future. And it also allows us to have a saleability across space that is much higher than gold. We can move Bitcoin across the planet in a couple of hours without needing to resort to any political institutions or any government institutions or any legal institutions. And so therefore, we have the makings of a free market monetary system, decentralized with no central authority. And it's something that can continue to operate, I think, without governments being able to stop it. And this means that we now have free market competition in money for the first time in a century. And I think that's going to restore the natural order of people always seeking and finding and using the hardest money. In a nutshell, this is my case for Bitcoin.